Hello mate, today in this video you will see analysis of Amazon's price action, a great moment in the chart that you cannot miss. You will also watch an accurate analysis of Acadia Pharmaceuticals. We will show you why this company can be a great opportunity right now. Are you ready? Give us a like, subscribe, and let's go! So let's start with the Amazon chart. Monthly chart on screen, moving average of 60 periods, or 60 months, therefore it is the average price of the last 5 years of trading. As we can see, after many years of prolonged highs, at the end of 2020, Amazon stock began to run out of strength, and after a few months of lateralization, sellers finally took the courage to push the stock down. Prices retreated sharply towards the 5-year moving average. This movement represented a drop of more than 40% in the price. Note that when reaching the average region, the moving average worked as dynamic support, and at first there was a test of the seller's momentum. This is also the region exactly where there was important resistance earlier. So the principle that a broken resistance becomes a support worked correctly. The chart is screaming at us that this is a value region. Now let's analyze the strength dynamics of sellers. Selling momentum was very strong on this bar, and prices fell without difficulty. That was the first leg down. After touching the support region, buyers appeared betting on a recovery, but soon after, they were vigorously swallowed by the permanent desire of sellers to push prices down. The second bearish leg lasted 5 months straight until it lost strength. So, there's again a new attempt by buyers to test the market in their favor. After the buyers had built up their positions over a month, the sellers were again called to play their cards. Note that this time the sellers' response failed to be as violent as it had been before. They even managed to leave a bar that signaled a further reversal to the downside, but this time they failed to impose a sequence on the move. What actually happened is that the bulls quickly took charge of the situation, and already imposed a defeat on the bears who had formed the red reversal bar. This is a very clear sign that the selling momentum that has existed in Amazon stock for the last few months is gone. At this current price level, buyers have much more confidence and appetite to build their positions. We have to take into account that we are still below the average price of the last 5 years, and that this average continues to point upwards. This is a very rare situation for Amazon. Trading below the 5-year price average is something that has not happened since 2008, when the stock was still trading at a measly $2. All the analysis done above would make no sense if this company were a bad company, with heavy debts, small market share, or no future prospects. You don't do graphical analysis of something that sucks. Always keep this in mind: if the company sucks, don't even waste your time on the charts. But this is certainly not the case with Amazon. The company has a net debt-to-equity ratio of 18.4%, and experts consider values below 40% satisfactory. Earnings are forecast to grow by an average of 36.3% per year for the next 3 years. Amazon has a market cap of $1.19 trillion and has sales of $524 billion. This forms a 2.3x price-to-sales indicator. If we compare Amazon's price-to-sales ratio with that of similar companies, we will see that the average price-to-sales of these 5 companies in the graph is 3.2, while Amazon's is 2.3, suggesting an opportunity to buy the company at a discount. And in addition, the price-to-sales ratio compared to its fair ratio made by experts is well below what it could be, as the fair ratio for Amazon is at 6.3. So I wouldn't hesitate to take advantage of this moment to put Amazon in my investment portfolio. What did you think of this analysis? Leave your comment below. Now let's shift our focus to the Acadia Pharmaceuticals chart. Acadia Pharmaceuticals Incorporated is a biopharmaceutical company focuses on the development and commercialization of innovative medicines that address unmet medical needs in central nervous system disorders and rare diseases, diseases which include Parkinson's, Rett syndrome, schizophrenia, Alzheimer's, among others. Let's get straight to the bottom of the company's fundamentals. Why are Acadia charts worth looking at? First of all, Acadia is debt-free. And furthermore, the short-term assets exceed its long-term liabilities. Acadia Pharmaceuticals is forecasted to grow earnings by 72.3% per annum, which would be a much higher growth rate than the industry it is part of, and also much higher than the growth rate of the U.S. market in general. When compared to its peers, Acadia's price-to-sales indicator is below average. The peer average is 14.2 while Acadia's sales price is 7.3, which suggests to us that the company's stock price is cheap compared to competitors. And finally, making a valuation using a discounted cash flow model, we have the suggestive conclusion that Acadia's share price is well below what it could be. ACAD is trading below fair value by more than 80%. After all that said, and keeping in mind that we're not talking about a bad company, let's move on to the charts. Here I show you the chart zoomed out, because I want you to see this explicit resistance and support dynamics over the years. Look carefully, in 2006 and 2007 the price made a double top, while marking a resistance for the Acadia stock. 6 years later, in 2013, this resistance was finally broken, and soon after, prices returned to test the region, which has now become support. See that the dynamics we learned in chart analysis books worked perfectly here. A broken resistance becomes support. Note that this support has been tested at least another 4 times over the years, and each time it has been proven valid. Now let's zoom in a little bit. See that in the larger cycle, we are potentially at the bottom of the range of movements. After retreating to a price zone where prices had already gone before, the movement rehearses a new high, in the same way as it also happened in the other opportunities. And now, as a last argument, I show you a clipping with just the last trading months and a MACD indicator. Note that this movement made a price bottom below the previous bottom. However, the MACD indicator made a bottom above the previous one, which shows us a signal divergence. This is something that the literature teaches us as a potential short-term reversal signal of a selling force. And it is because of all this, that I believe that buying Acadia Pharmaceutical shares at this moment can be a good bet for your investment portfolio. What did you think of this analysis? Leave your comment below, subscribe to the channel to receive the next content and stay tuned for the next analyses of great opportunities on the stock market. Stay charted, stay invested.